Good afternoon, traders. This is Z for eminywizard.com and marketwizards.com. Reminding traders to use risk capital you can afford to lose if you're playing this game. Risky business, as the swings lately have shown. And realistically, if you're fairly new to the markets, you probably should be getting an education rather than actually trading right now. Sim is a good way to start and test your skills, but trade small. And really, with the swings, you don't need to trade as large, but you do want to be disciplined with your stops. All right, let's take a quick peek at a couple of charts, things that I was looking at today. We did end our class last week, our last trading session, taking some time off for the month of December, and still will make a couple of posts in with those traders to help them here and there, and post a couple of ideas to show them things I'm looking at. 5-minute chart, our bread and butter chart, RTH. We can see at the open, we were obviously in an umbrella trade, still underneath all of the moving averages. And then you'll note the switch coming in late morning and towards the lunchtime, and then comes out at the top and then stays above this blue line all the way. And truthfully, this was probably the diciest time for the market today. Do we continue to bounce, or do we fall back under? And if it at this point fell back under here, then probably we would have gone back to retest again this 92 area. This was our angel area, and this was what I called as big support. Once we had tested the lows and hit 95s to basically the 85 zone, we had a target just below this a point or so, and we felt 85 to 82 should be respected, and then we got the bounce. So once traders were trapped, then it's a matter of holding on to them and then squeezing them long side. This is a great chart that really shows the proportion in the last couple of days. This is our predictive model. And based on what I was looking at, this 56 and a quarter was our resistance pivot. And the first and the most aggressive pivot back here in that 36 to 38 area. And if we could not break the 17s, then obviously we were destined to chop in that 18 to 38 area. And then, depending on which way it broke, other ideas would start to fall into place. Well, with this breaking that 18 area, it opened up the doors to come down to 97, which was our primary target really today. This was something I was looking to bust that 03 and see if we couldn't get to the 98 to 97. And then the good fortune part really was down here in a much better buy zone in terms of risk and reward. Just like the sell zone back here was much better risk and reward. So looking back at the ideas that came to my mind, I immediately thought that the 82 to 85 was our primary target once we got below 97. And I made it clear to traders in the room that if we got anything more than that, I would be surprised. Didn't mean we had to come out the top, but that's always part of the boys' plan, is to shake both sides if they can. So once we got this infighting in here and got the squeeze in the later afternoon, it got much harder for the shorts who basically were held captive. And I was looking at that 22 area as a key zone. I just felt that it had been a breakdown, and so if they could hold that, then they could squeeze it back higher. Here's our intraday chart, step by step. And you can see this was clearly was a breakdown area. And once that gets broken down, then it opens the door to come south side. Had come through it, tried to hold in here and tackle that 10 to 12 area, and then bounce. Got a really nice bounce. I think a lot of traders figured that was it. The low was in. And this shakeout, a pretty vicious shakeout right until the 11 o'clock time frame. And then the angels formed 93 and a quarter and never really came back even close to it, just took off and kept squeezing. And so this is suspect right now. This is pretty steep angle. So I'm going to keep my head in the game. despite the fact that here and there I'll be doing some shopping and whatever, won't necessarily be at my desk all the time, but I usually try to keep my head in the game. And even if I'm not trading, want to see what's going on and what the patterns look like. So for now, obviously, the most important support is the day's low, and then back here in that 2600. Once we regained '03, that was a support pivot that now is again support until broken again. So not out of the woods yet, but a good solid bounce by the longs today, catching some traders off guard who thought today was just a capitulation day. Using our system, there cannot be anything clearer than this box and where we thought the support was at 25.81 a quarter. When I call these numbers, it's not just like I'm guessing at a number. There's a reason for that. There's an objective reason. And so anybody that uses our stuff or understands what we're doing, and obviously it's easy enough to reverse engineer, try to help a few traders, do it for free for a lot of traders. And a lot of people don't want to listen to me because they have their own system, and that's okay because I'm probably not going to listen to your system either. I just love the way this worked, and day in and day out, it gives me a huge edge. And the E-widget, obviously, part of being able to look at this visually and say, okay, this is where they're going, and then to see the market melt back up above that 2603 and understand the importance of this 32 to 33 area, and then obviously popping back up into the next box. So this box for now is held. That's support. And now we've got to look, obviously, to the next box. So that's what I'm looking at. And if you use any kind of elementary math, you're going to see that's about a 100-point range. And this is going to be the middle. And that's obviously one of the reasons why I decided that, okay, you better be paid 85s to 82s if you had remembered one of the charts from the other day. This swing chart now needs to be adjusted because we've got a larger frame. And what we'll do is take the new low and plug that in. And that will change the dynamic relationships here. And it's something that we're going to keep an eye on. So we're recalibrated, simply updated the chart. Took about 30 seconds, not even, to just use the E-widget, plug in the new highs and lows. That's done automatically. And the current relationships then get respectively spaced out. And it shows me my next resistance box, my support box, and the current fighting box right in here. So this box, the 12s to the 42s needs to be resolved. And if so, then once that's done, we're coming back a little bit lower or coming back to punch through here. So I'm going to watch this for the next day or so, and I wouldn't be surprised to see the boys continue to try to push back, and then we'll get another push backwards. So this range right here, this huge range needs to be, this was very fast up and down and needs to be redone again, and nobody's going to know exactly where this thing turns, and that's why it's a little bit easier for trend traders to say, hey, I'm staying in short or I'm staying in long. Still really didn't get any answer from anybody as to, so what's the direction? If you're a long trader, where do you take your stops? Where do you say, God, you know, we have 250-point moves, but I'm okay with that. You know, I'm finding that hard to believe. I think the traders that know how to day trade can certainly become swing and position traders, and can certainly modify their stops and re-enter. There's no problem being a long or a short as long as you know where your pain points are. And once you do, then you can decide to be a swing trader and say, you know what, I'm going to let those position guys hold those for 5 years or whatever they want to do. But that's really no better a system than somebody that is a good day trader or swing trader that can accumulate profits and sleep at night. So that's just my philosophy. And let's wrap up with a look at tunnel through time. We can obviously see we're considerably overdone today and it was time for a snap. Once we get below this, we can keep on crashing, but if it dries up, then I look to see this try to come back and tag the middle. And this is right on the money. This is a 60-minute chart and a pretty good one, really, when you look at both sides being overdone. And that's typically how the market moves, from oversold to overbought. All right, guys, this is E for eMiningWizard.com and MarketWizard.com, and stay safe out there.